This is the analysis on the S&P 500, and I'm doing this different this week. One of the reasons I'm doing it different is because I brought out analysis in FutureSpeak on the stock market, which is pretty much still valid right now, and I'll just review that a little bit. And we shared that on YouTube for a very rare special that we put that out there. So that's why I'm going to do something a little bit different right now. I'm going to look at multiple time frame analysis, and I'm going to do a little trader bonus on here where I'm going to show you multiple time frame analysis that can really put you on the right side of the market, looking at the Dow Jones Transportation Average and the financials and silver. I just kind of wanted to mix it up so you could get an idea of that. We're going to start out by looking at the stock market and our regular analysis, and then we'll dive into some of the specials that I'm going to show you right in here. So what I want to look at first is the weekly chart that I have been sharing and talking about, this yellow area where we get normally pretty steep corrections. You can see in all of these cycles in here, and I'm just going to look at these last three right in there, when you get into these corrective phases where there are two cycles coming down is when you get your biggest declines. And this during this very bullish time frame after the pandemic crash right over here, declines were very shallow. Momentum conditions kept restoring to the long side and the positive side, and we still have momentum conditions right there. That is our reversal scout, which is our momentum indicator we use on the weekly chart. So this is a very positive time frame where you have long rallies and minor declines, long rallies and minor declines, and then a long rally again. We had projected this period in here because of this bigger cycle coming down that it would likely be a steeper correction. We had anticipated that it would move down during this cycle period, a corrective period here, minimum of 11% from the peak. We revised that to 5.3 to 7.7, which brings you down to these two support levels right over here. And then because of the action we're seeing in the market right now, there is a potential, and especially for the mega caps, that this might move out by a few weeks right over here. That's just the market telling us that there is that possibility. So we're looking right now still, even though we've made this all-time high at 44.40, for this to roll over and to go into one of these more mild corrections, much less than we had originally been talking about. That's just the market telling us that that's the likelihood right now. So what I want to look at now is the market in a different way. We're going to switch over to the daily chart first, and then I'm going to show you a 2-hour chart. So this is a slight variation of the daily charts I normally show, and I took out all the yellow bars and all the lines because I want it to be easy for you to see and easy for you to read. There is a dominant cycle that you can see right in here. So those of you that are new, this is a cycle bracket. This is a drawing tool. This simply is a guide, and you can see how closely it's following the cycle rhythms right now, where you have a long rally and then correct down through the 19th day. These are measured. These are now set at 20-day lengths right in here. It rallied and then moved down through the 21st day. It rallied and then moved down through the 21st day and rallied and moved down through the 19th day. So these are average length at about 20 days, as you can see. There's also a mid-cycle low. And when the market is very strong, you barely get any dip into those mid-cycle low periods, as you can see. And this one, again, was almost invisible, negligible. This is the slim ribbon, and it gives you our momentum indicator, which shows you when they are aligned on the long side. It colors the bars all green, and it tells you that the momentum conditions are positive. That's also reflected on the bottom when the momentum conditions are green. This is the slim ribbon PO. And this is only available to our level 4 members, and this gives you momentum signals, as you can see, which indicate the likelihood that you're going to continue to move on the upside, or you might get neutral. What is really interesting is through this whole period in here, it has never been red. There has not been one moment of negative momentum on this daily chart. And we've said many times, while we're looking for the market to go into a correction, it has not given us, the momentum conditions have been strong the whole time, and without that changing, you're not likely to get a decline. So we see right now that we're rallying through I'm going to tighten this up for you to see right here. We're now rallying through the 14th day, and we're expecting this will decline into 19 to 21, let's say somewhere over here. So it's about a week and a half of likely pullback to what are these support levels right over here. So if that's the case, that doesn't really entail the intermediate decline we're looking for. It wouldn't be enough. So what that would mean, it would likely be this next cycle that would have that steeper decline, and that would be in alignment with the mega cap corrections, and that again would push it out into early September, which we're just following what the market's telling us. So momentum clearly strong in here. So what I want to show you in here is the value of using this multiple time frame analysis a little bit more. So I'm going to look at just these last cycles right in here, and you could see on the left the momentum indications were almost always positive. And when you get these positive momentum indications on the daily chart, when you have alignment on what we have as a 2-hour chart in here, is when you're likely to get the biggest impulses. And I'll show you more about how to use this with even some other symbols. I'm just going to look at the last two cycles right here and right over here. And you can see right here that this whole period has been positive on momentum. You can see that on the slim ribbon PO right over here. And during all of the periods where the 2-hour chart is also in positive condition, when this is green and you're getting positive signals right over here, is when you get the likelihood of the largest impulses. Again, when the multiple time frames are in line in momentum, you're likely to get the biggest impulses in that direction. In this case, those are advances. When it goes neutral, you're not really in any kind of a trading state right there. And here where it's in conflict, where this is red but this is green, you don't have any kind of a trade at all. Now, when this turns, this is still green, of course, and when this turns green again right in here is again when you get the largest impulses. Let's just bring this in again, and you can see this cycle that we're in now, which we're now in the 14th day of the rally, and this period right in here where you have positive conditions on momentum here, as you can see, and when the slim ribbon PO is green on the 2-hour chart is when you have the potential for the highest upside impulses. And you're still under that condition, as you can see right now. Until this turns red right in here, and this is also red, and this will go red first because it's a shorter time frame on the 2-hour chart, you don't really have the opportunity for any kind of a real move to the downside. So while we're looking for a correction in the market, we always give important weight to the momentum conditions, the multiple time frame analysis, and right now in the S&P 500, you can see everything is still positive. Signals coming as positive, and until these are both red, you don't have any kind of a condition where the market can move down in any kind of a significant way. So I wanted you to see how that looks back, looking 9 months back, with all of those positive alignments and the impulses on the long side. Let's take a look. I'm just going to look at some other symbols in here for you to get an idea, and I've colored these a little bit more so you can really get a sense for the value. Let's look at the Dow Jones Transportation Average, and let's just look during this period here where it has been negative. You can see that right there, and I'm going to look at the same period right in here. This is a daily chart where we're looking back at this period where the slim ribbon PO, the slim ribbon was negative. And I colored this so you can see that negative period. Now here, during the periods where the slim ribbon PO and the slim ribbon were negative, that's where this is red, as you can see, I colored these. And what I want you to see is that while the dominant force over here on the daily chart was red, all this red, each time the 2-hour chart got into a red period, you were susceptible to a big downside move. And you can see each of those in here came during a period where this was negative and the dominant force from the daily was negative. Impulses to the downside because of this momentum alignment. Very important for you to understand momentum. So while the stock market has been making all-time highs, the Dow Jones Transportation Average, as we've shown before, has been in correction. Very significant correction, over 13% to the downside. And these are the windows of time when the downside move has come. So there's been a correction going on in the stock market. At the same time, it's been going up. So we talk about this churning or thrashing. This is an example of that going on. There's been a kind of an internal correction or deterioration going on below the market. Let's take a look at the XLF. The financials are always important when you look at the conditions of the market. So let's just take a look at these two periods right in here. And the reason I have them highlighted the way I do is because I want you to see that during this time frame right over here, which was June into mid-July, the momentum conditions on the dominant force on the daily were negative. Here you could see the same thing. Here's that same dominant period right over there. Did I set this up as a default too? No, I did not. And each of those time frames when this was red is when you potentially had the biggest declines coming. You could see where they aligned right over here, and you had that big decline coming. But what I really wanted you to see right now is that this turned green, as you can see right there in the financials, where the upside dominant force began here about 3 days ago. And then that sets up a period where if this daily aligns with the 2-hour, you can get some big upside. And look at what happened. Just absolutely phenomenal where they both moved up together. And this signal and here aligning with this signal here gave that to you. Big upside move there in the financials. Of course, the financials do better, and they're helping the market today a lot when interest rates begin to go up, because then the bank's margins can improve. Let's just look at one more in here. We'll take a look at silver, because silver is having such a bad day. And I'm going to show you this one actually in both directions right in here. As we look at this period right in here where silver was strong right there, and we'll look at the same thing right here where silver was strong. So you have these alignments right in here where you have this back here looking in April, the slim ribbon positive momentum. It's strong during this whole period. The slim ribbon PO giving you the positive signals on the daily chart. We would expect that during each period on the 2-hour chart, when the momentum was positive, was the potential for the largest impulses to the upside. Look at how you can direct yourself here for the proper directional movements. You would never be short when the conditions are green over here, and especially you'd be long when the conditions are green over here. And you can see that 2-hour chart giving you all of these big upward impulses right there. Absolutely beautiful. It catches all of those upside moves. But now let's advance it to this period right here where silver turned negative. You can see that right there on the daily chart and right over here. So this is the time frame where silver turned negative. This is back on June 17th, and it's been in negative momentum ever since. The slim ribbon PO red and giving you these signals. And these are the periods right in here where the 2-hour chart went negative and told you there was a high probability for continued movement on the downside. You would never be long under these conditions if you were a trader. Here's a little period right here. It gave you nothing. Here's a period right in here where it was clearly red on the 2-hour, aligned with the daily, and it brought you a large decline. And look what happened here. Let's just look during this time frame right over here. And you can see what's going on here today and yesterday, as this is, of course, negative. It turned red right there. And look at the big decline as you see right there. So just a very, very valuable information as you look here. This is looking at the slim ribbon and the slim ribbon PO. And slim ribbon PO, again, only available to level 4 members. This is how you align yourself for trading to get on the right side of the impulses by understanding the multiple time frame analysis and momentum conditions. As I said, the stock market has been in a positive alignment in momentum conditions for a very long period of time, despite the fact that I have been looking for a correction. I've continued to say that the market is not telling us it's there yet. And even though we can draw the lines and anticipate that on the charts with some regularity in the periods of the cycles, sometimes they do get off. And in this case, they're extending out pretty long. And we think that the stock market will have a significant correction. And if you watch in the beginning of the show, if you haven't seen that, we show you something on margin debt and the fact that margin debt is now at 2 standard deviations at the extreme on the upside. And when that begins to unravel, there's a lot of trouble. Obviously, it's not affecting the market yet, but we believe it will. And then when that begins to happen, you will see these momentum indicators begin to turn red and set up, which are some large declines.